Hi, good morning. We'll proceed with our webinar. The two topics for today will be our initiation on micromechanics, and we'll also provide a Singapore strategy update. Hi, for micromechanics, we titled it high margin and also it's a high ROE consumable business. Do note that this report is slightly different from the rest that we do. It's under the XGX stock facts, whereby we do receive some compensation for this report. Move on to micromechanics. Just to give a background, this is a long established company, been around for almost 30 over years. The presence is mainly in Asia, and they have one unique factory with a different strategy in the USA, which I will elaborate later. Basically, they produce precision tools and consumable parts. This sounds a lot, but I will explain a bit more detail in the later slides. And also, apart from the back end of the semiconductor, they are also building up capabilities for the front end. And to build, this will be the future kicker for this company. In terms of the investment merits, the company enjoys 60% gross margins and 30% of ROEs. As you can see on the bottom right-hand table, you can see that the gross margins has averaged about has been above 50% the last 15 years. And in the most recent quarter, it approached nearly 60%. We expect 60% margins in the next 2 financial years. And the third point is that they have enjoyed all this growth with an unleveraged balance sheet. Basically, they've not taken on any debt before. And at the last stock price, it was trading at about 5% dividend yield. And also worth noting that in the most recent June quarter, the earnings was up 60% year on year. We expect the momentum to sustain, which I will elaborate more later on. In terms of valuations, we target this at 15 times PE. This is basically in line with their peers in the back end in semiconductor supply chain. Do note that there is no direct comparable, but we've taken the whole back-end supply chain as a proxy to value MMH. Micromechanics, the back-end basically it's the packages and also your equipment makers. The packages will be some that you're probably more familiar with, like something like Stats Chippack. And the valuations could actually be conservative in view of their superior margins, ROE, and also yield compared to the industry. The chart on the right basically that shows you the track record. As you can see that the earnings has been 20% CAGR. There was a downturn during the global financial crisis, but since then you can see there's a stellar increase in profits. I'll move on to the second slide. I'll spend a bit more time on what they actually produce because it's a niche and not very well understood. Firstly, in semiconductor, you can break up the process into the front end and back end. The front end is basically what the wafer fabs make, something like your chartered semiconductor. In the past, that's called the front end. That's where they produce the wafer. The back end is where, as you can see on the far right of this slide, we have the back end encompasses many steps, but the few broad steps, what micromechanic focuses on is the die attach and the wire bond. When I say die, it refers to the tiny little chips that you see on the wafer, the little square dies, which is essentially where this is essentially your semiconductor. I'll first start off with one of their major areas or major revenue contributor is the die attach. Basically, what a die attach does is that it picks up these little tiny wafers, and then it attaches on the lead frame. Again, it sounds very simple, but due to the size of these dies, which can be, the size can be as small as, you're talking about millimeters. As you can see on the far right, the picture on the right, the rubber tips that they make. These are, as you can compare it to the needle that they show here, it's really tiny. And what they do is the rubber tip and also the metal bar on this side. Firstly is the precision of it, because it's so tiny, and also they have a lot of the material composition of these rubber tips are actually in-house produced, because these rubber materials can react to the semiconductor die, so it has to be a certain very specialized rubber or plastic that they use. The picture here illustrates better a bit on what it actually produced. That's the black rubber tip at the bottom and also this whole metal. And this is what is used for the die attach, which is basically picking up this tiny semiconductor and placing it on the lead frame. And all these are consumables because they need to be replaced every couple of hours. Okay, the next slide will be on the wire bond, which is, as you can see, we had the die attached, then now is the wire bond, which is the other area they focus on. This is a smaller contributor to revenues, but basically what they do is the metal parts here, which hold on to the lead frame in order for the wire bonding process. Again, it sounds a bit complex. Basically, when you look at the typical semiconductor chip, the black thing that you see, which is encapsulated inside, there are some wire bonds which connect to the lead frame. My initial worry was that the latest packages actually don't use wire bond, but wire bond actually still is about 80% of industry packaging. And also, as you can see, I intentionally had this photo here because as you move on to the flash chips that we always use in our phones, they do still use a lot of die attach. And this picture on the bottom right, you can see this is a 16 little dies attached, and the latest can be even 32 to 64. So wire bonding is still it's a process that's still very well used in the back end semiconductor process. The final product that they do, it's on the front end. These are parts used in the vapor disposition and etch machine. This business has been loss-making. This is more their strategic direction to move beyond just the back end. They are trying to push into the front end, which is where the capex is higher, and also where companies are willing to, where most of the spending is on. This is a long process. They've acquired a company. This is almost 10 years, and also they've been losing money, but the losses are beginning to narrow, and they're losing now about $600 to $1 million. This is a longer term upside for this company, just that they have to it takes some time for them to build up the capabilities for the front end. I'll move on to the next slide. We've been asked why the margins has been so good. Just to give you a flavor of their competitive advantages. This picture is just to show you how small some of these semiconductor chips have become. Anyway, one of the reasons is that the increased miniaturization of all the chips. As a result, to produce these tiny little tools to pick up these semiconductor chips requires huge precision. Some of these dies are 1 millimeter to even 10 millimeter in size. As mentioned earlier, it's also a lot of complex material science involved. Most of the rubber tips that they produce are all in-house intellectual property. The composition of these materials are all created in-house. Another reason why the margins have been high is the need for customization. The reason we say that is that it's a very funny quote among their customers. Every customer that they service want to have their own different little tools, even though the machines are the same, but they want to design their own. They want to design their own tools to be used in the die attach or wire bonding process. And again, the other reason is the more obvious ones, where you need high accuracy when you place the die. These are like 3 micrometers. And also, the die attach has a huge volume and is very automated. So the products they produce have to be of huge quality. And also due to thinness of the die and fragility, you need very good tools, and there's a high barrier in terms of producing these tools. I'll move on to the next slide, which is what we liked about micromechanics. Firstly is the obvious huge margins. Their gross margins has averaged 55, and they are now encroaching the 60% in gross margins. The margins they enjoy is easily double the industry, which I will illustrate later in the later slides. The other reason why we like micromechanics is the great track record. They have a long 15-year record of compounding earnings, about 20%. And we actually see earnings accelerating in the last 5 years. Actually, the earnings for the last 5 years is pushing towards the 30% CAGR. The third reason why we like it is the healthy balance sheet. There's no leverage for the past 15 years, and they actually have a 22 million net cash on the balance sheet at the moment. The fourth is the consumable nature of these products. These are not exceptionally cyclical. These are not the semiconductor equipment that can be exceptionally cyclical. These are consumables that need to be replaced every 8-hour shift. Of course, it doesn't mean every manufacturer or customer will change their products every 8 hours or change their tools. These are mainly for the higher end chips. But what it just illustrates that these are pseudo-recurrent products that are consumables. And the other is, of course, the huge growth opportunity. There are multiple opportunities for semiconductors now, from the from IoT to solid-state memory to wearables, vehicles, and the forecast out there is about 9% growth per annum in terms of the volume, because ultimately micromechanics thrives on the volume and not the value of these semiconductors. And the final reason is that as packages evolve, I won't get into too much details on this, but the packages has evolved to multiple ways to wafer level packaging, flip chip. But despite all these advancements, the requirement for die attach remains strong. My initial worry was that as packages evolve, I was very worried whether will there still be a need for die attach and also these wire bonding. But as I realized that the even advanced packaging actually needs even more die attach. Just a quick one: as you do the flip chip, there's actually a double handling, and you actually need to use die attach even more. I'll move on to the next slide. Okay, in terms of the outlook, I guess this is probably more interesting for you guys because of the share price performance. We expect robust revenue and earnings outlook in the near term. The revenue has a very close correlation to semiconductor industry. As you look at the bottom left chart, as you can see, these are the annual growth. As you can see, the semiconductor sales and micromechanics revenue tracks pretty closely. And in the second bullet point, in the June quarter, again, as mentioned earlier, the earnings jumped 60%. And the latest July number, which will give us some heads up into the first quarter, into their first quarter 18 results, or at least their their September results, shows that the momentum coming up into the first quarter 18 remains robust. The latest July semiconductor industry sales was up 24%. This is the fastest pace of growth in the last 7 years. And worth noting that the pickup in semiconductor sales only started late 2016. So we could see another few more months, or at least another 1-2 more quarters of strong semiconductor industry sales, at least due to the base effect, because it was quite weak the last couple of years, but now you see this strong pickup. Okay, my final slide, just on the valuations. If you look at micromechanics, is in this red box. As you can see, when I put 15 times, it's more or less in line with the industry. The industry peers that I use are we call it OSAT. Basically, these are the outsourcing guys. These are your Stats and Chippack. Like Stats and Chippack was acquired by this company, Jiangsu. Basically, and in Malaysia, you have a lot of all these packaging companies and packaging and test companies. But I use this because these are involved in the whole back-end semiconductor supply chain. The other supply chain that I used was the equipment makers. These are the more famous ones would be like your Kulik and Sofa that does a lot of wire bonding, and also this B Semiconductor and ASM that do a lot of die attach equipment. So these are my proxies, and if you can see, the industry trades about easily forward of 1 year or 2 year forwards about mid-teens. So that's how I got my valuations for micromechanics. And do note that because micromechanics earns higher dividend yields, as you can see in the whole industry, and also better EBITDA margins. I didn't use gross because gross can be, everyone has a different definition of gross, but at least EBITDA margins, you get some consistency, and you can see that their EBITDA margins are sometimes double or easily triple the whole industry. Only in ROE, they are 28%. We do see some companies better, which is the B Semiconductor, and also Inari in Malaysia. These are the only two guys that have slightly better ROEs. That's it for my slide on micromechanics. I will just quickly move on to our Singapore strategy update. No change in our STI target right now, 3270. Just to give you a quick snapshot of the macro environment, as we all know, the Fed just concluded their meeting, and the December rate hike is probably baked in for as was strongly hinted by the Fed. More interesting was that there's been little impact on the US dollar or yields. And what from our view, our stance is that unless there's some tax cuts or tax reform in the US, you probably, the counter trend rally may not be as robust until we see some inkling of the tax cuts or tax reform out of the US. Something to note would be, we could see, the thing that worries me a little bit is that the macro data in the near term could be a bit distorted. We could see some weakness in the macro data in the near term. This is because of the US hurricanes, and also less well publicized is that in China there's going to be a major production cut to the steel and aluminum industry and any of the polluting industries. These cuts could last until March. That's one of the reasons why you saw a big spike in steel prices, because the Chinese government is imposing some production cuts. More on Singapore front, the Singapore macro, as we noticed, the latest export numbers has been extremely robust. I think it's up 17%. But more important, we look at the year-to-date numbers also. The year-to-date exports are actually up the fastest in the 6 years. And the PMI new orders also suggest that the momentum for exports could sustain. In terms of our stock picks, no major changes. We still, these are our key yield picks and also property. And of course, we still have a buy on Banyan Tree due to the pipeline of hotel management contracts. And also for coal, because Singapore listed coal producers are one of the fastest growing. And also coal is also a beneficiary of the SOE reform. And this is the SOE reform that's partly driving up the Chinese markets, as we see the Chinese government cut production in steel and coal. We also recently upgraded DBS. As we move into 2018, we see 3 tailwinds for the banking sector. There's the rising SIBOR, which is an 18-month high, and also the healthy capital markets, which would help drive the very critical wealth management business, which can be as high as 30% in terms of earnings. And also we see and the third trigger, which we do not see right now, but we expect will be the improving domestic economy. Right now, the domestic economy is still a bit lackluster, but as the external environment improves, we could see this start to pick up. And finally, our buy is, of course, micromechanics, which is the proxy to the surge in the semiconductor sales. Finally, in terms of sector updates, we do track some key sectors, which is, the retail sector has remained still soft. But we do notice a sharp pickup in construction contracts awarded recently, and also materials is starting to bottom up. I'm referring more to the reinforced concrete. In terms of hospitality, as we noted in our monthly report, there was some nice data coming out from hospitality, referring to tourist numbers and also the RevPAR. But all this started to fizzle out. The July data has seen tourist numbers start to be quite sluggish again. Finally, in terms of property sales, our property sales here refers to primary and secondary property sales. We saw a 60% jump in August. And also 2017 will probably be on track for the best property sales in 5 years. Move on to our final, which is our video. We just wanted to highlight our video, which we will be producing for most of our key reports. So that's yeah. We'll just move on to the Q&A. We do this video just for any of your clients who just want to have a quick and fast understanding of our Singapore coal sector report. Thank you. We're open to questions now. Okay, our first question is that would MMH or micromechanics be considered expensive, and also better to wait for the future correction or market crash to buy? Okay, I really can't comment on the market crash, but at least I can just say that as mentioned earlier, the micromechanics is still trading at a steep discount to their peers. And more important, the key thing to track is the semiconductor sales. If the next 1-2 months you see very strong numbers, then I think the first quarter or the September quarter you can bake in a very strong earnings coming out from their first quarter. Our next question is target price for chip Insing. Sorry, give us a few minutes. We'll get back to you. In terms of where to track the semiconductor sales, we do get it from Bloomberg, and we always publish it in our Singapore monthly, and we will try and update you whenever possible. Or you can always just send us an email. We can always let you know. But the data always comes out earlier of the month, earlier part of the month. The next question is a target price of $2. Again, we base it out of 15 times FY18. The industry is trading at about around 15, as mentioned earlier, 15 times. That's why we're just pegging it to the whole semiconductor back-end supply chain.
Hi, good morning, guys. Teh Hong here. There's a question on target price for Chip Eng Seng. Our target price for Chip Eng Seng is 90 cents, and this is at a very conservative 50% discount to RNAV, and this is after factoring in all the good execution that they've done for all the property development projects, including the one they launched earlier this year, Grandeur Park, is already 80% sold. Just launched this year and it's already 80% sold. And note that our target price do not include the valuation for the construction business as well. So it's a very conservative target price. And actually, you can refer to our morning note for all our target prices for the stocks under our coverage, the back page of our morning note, or you can go to Stocks BNB for the latest reports.
Yeah, hi. This is Paul here. We'll answer some of the micromechanics as Gongcha gets the answers for some of your cold questions. In terms of the major customers or micromechanics always disclose that they have almost 600 customers. Most of these are like your stats chip pack. They will buy the machine if they want to do the die attach or wire bonding process. And could be even someone like Intel or even TSMC that also want to include back-end processing packaging on a selected basis. But if you can read, in our report, they probably wrote about 600, or actually that's what the number the company discloses. Yeah, thank you. Okay, just another question. In terms of the Philip, which part of Philip website holds this semiconductor sales so we can monitor? We only publish it on a monthly. We don't park it in the stock our stocks BNB. But let me see how we can try and figure one way whether we can park these kind of numbers in, or we will try and update you as fast as we whenever we get the data. I mean, if once it comes up, we will always just update in our usual weekly webinar. Give us a few minutes on some of the other questions. Thank you.
There is a question asking about since coal is declining to be replaced by solar, how long will gear last? So here we show the chart of the energy consumption breakdown. You can see here over the last 15 years, actually the main energy structure is still heavily based on the fossil fuels, which are coal, natural gas, and oil. So you're right. Solar is the renewable energy that like every country is eager to push, but at this point of time, solar is still taking up quite tiny portion of the whole energy consumption. And also, we think that solar wouldn't be deployed in a large scale over the next couple of years, since its cost is still much higher than coal. There is another question asking about will the coal prices drop like oil. So if you read our report, we already stated that China is the coal price sector for the whole industry. So at this moment, China, the NDRC already set up quite a few rules to regulate the coal prices. So the main purpose for China's authority is to stabilize the coal price. So we think that moving forward, the coal prices will stabilize at the within the range that previously NDRC set the
Okay, I'll just answer this UMS question. Generally, how does micromechanics differ from UMS holdings in terms of operational numbers? From my understanding, based on the latest quarter, UMS has about 50% gross margins, and likewise, UMS also has done well because of the semiconductor cycle. UMS, just to recap, it mainly supplies to applied materials, and we didn't include them into the valuation table that you saw earlier. It's because UMS is more on the front end. They are almost like what micromechanics is targeting on the point, which is the fabrication of front end wafer vapor deposition and also etching business. I think UMS did well because they got very good program sign up with their main principle, which is I think their major principle, which is applied materials.
So we have the regarding the target prices for UOB and OCBC. The target price for UOB is $20.18, and the target price for OCBC is $10.81. The prices for OCBC and UOB have not been moved up higher because we feel that in terms of how they match up with DBS's cost of funds. They can't, they're not as competitive as DBS. As we know that the landscape for the lending markets is getting more competitive, so we think that DBS will outperform in this area. And secondly, it's the wealth management franchise. Of all the three banks, UOB has the least number of AUM, and I think that compared to OCBC and UOB, compared to DBS and OCBC, it is not getting as much traction. So therefore, UOB has that reduced rating. Thank you.
Yeah. Okay. We've got another question on the US stock prices are sky high right now, and there's expectation that there is an impending correction soon. Will the US tech stock correction have an impact on micromechanic prices? In general, it will have, but fundamentally not. But I mean, the US tech prices are driven by the FANG boys. I mean, the Facebook, Apple, Netflix, and so forth. So these are more the internet stocks that's driving up the tech stocks. For micromechanics, as will be driven more by the semiconductor cycle. And I know there's been requests on, we will try and update you whenever we get the monthly semiconductor, the SIA monthly sales numbers. We'll try and update you whenever we get that. Thanks. There was a question on why was there a spike in MMH price on 22nd. I guess the only thing you can say is that we did release the initiation was on the 22nd of for micromechanics. We released it on the Friday morning, I think. Yeah. There's a question on the is Hong Kong still on an uptrend? I don't think we can. It's better to ask our Hong Kong side because we have a Hong Kong research team. Probably not appropriate for us to answer on their behalf. Yeah, thanks. The question was, who are micromechanics direct competitors in terms of products by products? We tried very difficult to get those numbers. I can only say that I won't be surprised that micromechanics is a sole supplier to many of these, to many of their customers. Because once you do customization, and for a small little product like this, I don't think the customers will want to have a multiple source. So the other competitor that I know of is probably the equipment makers, like the B Semiconductor. They do produce some of these tools and consumables for their own machines, but because theirs is only for their own brand of machines, people would still prefer to use micromechanics. And again, the customization makes them sole producer, I believe, to many of their customers. Yeah, thank you. Okay, thanks for all your questions. I think we don't have any other new ones, so we'll just end the webinar right now. Thanks again for listening in and for your questions.